This is the Uptick Newswire Stock Day Podcast, sponsored by InvestorsHangout.com. Subscribe to us on iTunes, Google Play, and YouTube to stay up to date on penny stock news and interviews, public information on OTC, pink sheets, and microcap stocks from around the world, with your host, Everett Jolly.
On today's show, we have a returning guest. I'm super excited to have him back on the show. We're talking about Flexpoint sensor systems. They are an innovative technology firm. They specialize in their patent bin sensor. And what that does, it's a groundbreaking sensing solution that revolutionized applications in automotive, safety, medical, and industrial industries. And with us today is the Vice President of Sales and Marketing, Paul Sexauer. Paul, how you doing?
I'm doing well, Everett. Thanks for having me back.
You know, I want to tell my listeners, if you're looking for a technology company that's getting ready to blow up, this is the company. They trade on the OTC market, ticker symbol FLXT. Their revenues were up 60%, actually 66.2% in the second quarter. And with us today is Paul. Paul, tell us a little bit how 2017 is progressing for Flexpoint.
Well, as you just indicated, you know, our revenues were strong in Q2 relative to year over year and quarter over quarter. I think that speaks volumes as it relates to our projections and our plans for the year. You know, between Q1 and Q2, it's been a strong start. I'm expecting even greater things in the back half. I think the biggest contributor has been the fact that we're hitting on multiple cylinders, on multiple market segments, and from toys, and boy, we're really excited about what's going on in the virtual reality and augmented reality space. Our technology is clearly differentiated there. We're delivering real value to our partners, and they're delivering their products to the market, and we're excited to be a part of that. But the whole medical IoT space, you know, one of our customers out of South Korea, Neofect, we've talked about them before. They were an honorary award winner at this last CES in January. They are expanding their market now in the U.S. with their FDA approval and all the things that they're doing, and there again, we're a part of it. We acknowledged, you know, early on in the year and leading into the year that we needed to make some process improvements to be prepared to handle the increased production requirements that our customers were placing on us. And I'm happy to say that many of the things that we had implemented and are continuing to refine and implement are taking effect. And the key outcome of all of that is we're improving quality, we're improving yield, and subsequently improving profitability as a result. So, you know, all in all, I'm pleased. I'm happy to say that, you know, Q3 and Q4 are showing more of the same.
You know, we truly are in a smart age technology decade, if you will. Take us, if you will, give us a streamline. How do you guys make a sale? Do you send your products to the OEMs, or do you reach out directly to the end user?
Great question, actually. You know, historically, we have responded to inquiries from innovators and inventors, people that wanted to either move an existing technology forward or create something new. We have done a real good job, as we talked about, I think, in November and then subsequently in March. We've expanded our channel presence. And so we have actually our product out there creating brand awareness, brand identity, and people are buying our stock sensors. But the reality is 95+% of what we end up doing for a customer is custom. You know, a 1, 2, 3, or 4 inch sensor is not exactly what they want. They're looking for something of a unique size, you know, specialized characteristics on performance, and so we engage very early on with their engineering resources, and we're fully capable of doing turnkey, and we do that on occasion. But really, it's a collaborative effort between our engineering staff, their engineering staff, and right-sizing a solution exactly the way they want it. And that's an iterative process. It can take some time. Bringing new products, new technologies to market is non-trivial. Depends on the market segment you're in. Automotive has a long lead time for that, whereas medical and others aren't quite as how shall I say, difficult. But there are barriers wherever you go. But we work very closely with them, and then we have the production capacity to deliver on large volumes of those sensors as they commercialize those applications. So it's really exciting to be a part of that innovative and inventive process.
You recently came out with a press release around middle of July saying that you had received orders for 150,000 sensors globally and that you project that your earnings will go up 500%. Can you elaborate on that statement?
Well, if I recall that press release in particular, it was squarely focused on the VR/AR market, which is why I'm so excited about it. Virtual reality, augmented reality has been blossoming the last couple of years. I think Goldman Sachs and some other analysts have projected it to be a $80 to $100 billion industry by 2023. And those increased order volumes are just the tip of the iceberg as it relates to the peripherals in the VR/AR space where our sensors are playing a role, and the market adoption. And the market adoption is not just pure play gaming. In the B2B space, that actually, the adoption in that space is even more rapid. And there are applications from training to, just marketing. How can a company like Caterpillar, for example, show a large combine to a potential buyer in Europe without that buyer, going to Eastern Illinois? Well, with the VR/AR application, they can experience the product remotely. They don't have to get on a plane. It's going. You're going to find VR and AR in all facets of life, both public and private, military. There's a wide variety of applications, and we're happy to be a part of it.
You guys had a really bang up, actually year, I think, if my numbers call correctly, you guys are up over 100% for the first 6 months compared to 2016. What do you attribute that to? And out of the 4 sectors you're in, where did the revenues come from?
Well, coming into the year, and even looking back a little bit in 2016, we had the benefit of global Fortune 500 toy company that had designed and engineered our technology into a couple lines of their toys. And I'm happy to say that the projections of production volumes met expectations over that 12-month period, starting mid-year last year through the midpoint of this year. So that's been a good, consistent, and repeatable revenue stream. The VR/AR space, the growth there has, if it hasn't exceeded expectations, it's met the highest limits of those expectations, and it will continue to do so. And even in the medical, there are also some further developing market segments that we can probably talk about a bit later. But I would say that those 3 are probably the greatest contributors to our success thus far, and it looks like they're going to remain that way for the foreseeable future.
My guest today is Paul Sexauer. He is the Vice President of Sales and Marketing for Flexpoint Sensor Systems, Inc. They trade on the OTC markets, ticker symbol FLXT. Are you guys going to be experiencing any M&A or surprises in 2017 that you might be able to let us know?
Well, I can't speak on the M&A side. But surprises, yeah. The whole electronics industry is very robust right now. I'm a little surprised at the long lead times for, some of the sub-suppliers that we rely on, our customers subsequently rely on, whether it be our base substrate materials that we print our electronics on, or wiring harnesses, connectors, all the other components that make up assemblies. Lead times have extended 2 and 3x compared to where they were a year ago. And so it's forced us to plan ahead. It's forced our customers, and I'm not disappointed in that, to make commitments earlier on. But it's definitely forced us to manage the business a little bit differently than we might have in the past. We are definitely seeing a rapid advancement and development in the consumer electronics space, and I'm really excited about that. We've had some research institutes that have leveraged our technology in the next phases of consumer electronics, such as flexible displays, flexible smartphones, flexible tablets, and all of many of those were actuated through the use of our sensors. So we're uniquely positioned, I think, to take advantage of the advancements, technology advancements in that space, the growth, and it's really going to be special for us in 2018 and beyond.
Well, you guys had 2 special quarters in 2017. What needs to happen to Flexpoint for 2017 to close out strong? Hopefully that this is just a building block for better things to come, yes?
It is, but I think it's imperative that we, given our size and the resources that we have, that we stay focused rifle focused on the market segments that we know we're differentiated in, and that we're able to deliver value to those customers, because that will enable us to continue our growth and continue to be successful. We have to stay true to our plans from a revenue perspective and profitability perspective, manage costs as effectively as possible so that we can reach and exceed that cash flow positive point and start delivering, real profits back to the investors who have stuck by us for a long time. A lot of that starts with just exceeding customer expectations, and that's probably our biggest mantra. The partners that we've identified, potential partners in some of these developing markets, stay close to them, side by side, in the same trench, and work with them, just as I alluded to earlier, in a collaborative manner, and deliver on the promise of those future technologies. And I guess lastly, just stay agile. You never know what's going to come around the corner, and if you're not looking for it, it could hit you upside the head. But I think we're hitting on all of those points.
Flexpoint Sensor Systems is the company that we're highlighting today on Stock Day. And the reason why we are, they just came out with their second quarter 2017. Revenues increased 66%. Their market cap's only $5.4 million. Stocks trading around 7 cents a share. I believe it's very undervalued. I believe they turned the corner. I think it's a buy here. That's my personal opinion. In closing, Paul, is there anything that you would like to get out there to the listeners that maybe we didn't touch upon?
No, I think the future's bright for us. We're having a lot of fun and delivering value, and it's just a joy to be a part of it. We'll keep it up.
Well, I wish you nothing but continued success. Hopefully you'll come back on the show in about 60 days and give us an update.
Thanks. I'll look forward to it.
This program is entirely sponsored and produced by Uptick Newswire, LLC, which is responsible for the content. The opinions and information provided on this program are those of the guests and those of the respective companies they represent, and do not necessarily reflect those of the staff or management of Uptick Newswire. Uptick Newswire encourages all listeners of this program to do their due diligence and research when determining investment strategies that will work for them, or to seek the assistance of an investment professional. The guests of this program may have paid for its distribution and are not directly affiliated with Uptick Newswire or this station.